With the start of the earnings season, let's have a look at the companies that would remain in focus the most. Now, we have curated this list from the Bloomberg terminal, and we have taken only those companies that have at least 10 analysts covering that stock. Now, of the 186 companies that we have got in this list, nearly 132 of them are expected to report a decline in their EBITDA margins in the third quarter of financial year 2022 compared to last year, while only 54 of them are expected to report a margin expansion. So let's first have a look at the companies that are expected to report a margin expansion compared to last year. Now, among the top 5, theatre and hotel stocks feature on that list. Now, in the theatre stocks, if you see, PVR and Inox are expected to report their highest margin expansion compared to last year because nearly all the theatres across the countries were allowed to operate in the third quarter. However, the occupancy levels were a bit limited, and that is the reason, and that could be the reason why, if you see, the EBITDA margins that the companies are expected to report would still be below the pre-COVID levels. Theatre on hotel stocks like Indian Hotels and Lemon Trees would also see a margin expansion, and the reason behind this would be higher room rent and higher occupancy levels compared to last year. Lastly, among the top 5, ONGC also features on the list, and the reason behind this would be the higher crude and the gas prices in the third quarter compared to last year. On the flip side, if you see, NMDC's margins are expected to crack the most, and the reason behind this would be the price cuts and higher royalty that the company had to pay in the third quarter of financial year 2022. Now, city gas distributors like Mahanagar Gas and Gujarat Gas also feature on the list, and the reason behind this margin decline could be the higher raw material cost, that is the higher gas prices in the third quarter. Along with that, we have Sagar Cements, which will see a most decline in their margins on the back of lower volumes, lower realizations and higher commodity costs. And lastly, Finolex Industries would also see a drop in their margins due to absence of inventory gains in the third quarter of financial year 2022.